Hey, everybody, this is Greg Ryder, CEO of Angel Investors Network, and I'm super excited today to do another interview for you and bring you guys some wisdom and some knowledge. And if you're new to Angel Investors Network, what I do from time to time is I try to interview people that have been there, done that, and people that have burned and crashed, people that have been successful, with the idea to deliver some wisdom that can help you get there faster, eliminate mistakes, as well as share with you kind of what's going on with what we're doing. And today I'm excited. I got Mitch Lowe on with us. And Mitch Lowe has an amazing background being involved with Netflix and then Redbox and now with a company called VidBox that we're involved with. So Mitch, I want to say thanks for taking some time to talk to me today. I appreciate it.
Yeah, my pleasure. It's great to talk to you.
So can you start off with, how did you get involved as an entrepreneur, and how far back have you been in this entrepreneurial world and involved in startups and taking companies and getting involved in that whole stuff?
Well, I think my whole life I've never wanted kind of a regular job. I never wanted to report to someone. And so I've always been, going back to, kind of when I was like 10, 11 years old, tried to figure out ways to make money. I think it's just, I don't know, I think some people, it's just their nature not to like to have regular jobs. But in my what I consider my adult life, I was always in love with movies. I love watching movies and kind of grew up in that 1950s, 1960s TV generation. And when I had been in Europe for quite a long time, where people don't watch television, and I came back to the States in the 70s. And this video rental revolution had just begun. And so being a movie lover, I started renting from one of the 4 stores in the entire San Francisco Bay Area, and got tired of paying all the fees. And, in those days you paid a membership fee. And I realized these guys were growing so fast, they needed money. So I figured I'd loan them some money, and in exchange I'd get free rentals. What I didn't know is that they were horrible business people, and they immediately lost all the money, and I had to come in and rescue it, and that's how I got into the video business. But my experience in watching how they collapsed was all about internal theft. They were, it was a cash business. This is pre-computers. And so I thought the perfect solution was a vending machine, because it controlled the inventory, it controlled the cash. And so back in kind of like 1982, I came up with this idea for a vending machine to rent movies. But of course that failed. I tried it for 2-3 years. It was one of my real big crash and burn experiences. But during that time, the internet started popping up. In 95 and 96, Amazon was running those ads that, even the Queen Mary couldn't hold all the books you could get from Amazon. And so then I got excited about the internet. But I think my whole career has always been about kind of not really being original in ideas, but understanding how other people's good ideas could be executed and work.
Wow, very cool. No, I think back to like when you said that you started at a young age. I remember selling newspapers. I remember selling seeds door to door to plant your flowers. I remember, I was always selling something. I was always the one leading the sales thing, and so I was just born that way. I think maybe it had to do with my mom. I don't know, but
yeah, no, it's much better than wanting to go to work and then forget about it at 5 o'clock, which I think a lot of people are more comfortable like that. But you and I are not those two people.
You just brought back a memory too. So back in 1982, 83, I started, and actually I bought a broker-dealer that I had my securities license. We were raising money for companies, and I brought a broker-dealer that I worked for. And I think it was probably 84, 85, somewhere in the first couple of years. I can't remember his name right now, but he walked into my office with 2 VCRs soldered together, and he goes, "I invented the world's first dual-deck VCR. It was called Go Video."
I remember those guys.
Yeah, we raised the original seed capital for him, so we were kind of familiar with what was going on in that space.
Wow.
So when did you get involved with Netflix, and what was your role with Netflix?
Yeah, so in '97, I had developed a small company that was called but they had this, competition that was looming from, big players like Amazon that were going to sell DVDs. So we built a business that any video store could, with a menu-driven program, not knowing a lot about the internet, could have an online presence, could have a newsletter, could sell used movies to their customers. And I was exhibiting at a show in July of '98 in Las Vegas, and a guy came up to my booth, with a backpack and sandals and, kind of a scruffy beard. And he kept asking me all these questions, and I could tell he was, just a super smart guy. And I remember about 2 or 3 times he tried to leave the booth, and the last time I grabbed his backpack and pulled him back. I said, wait a minute, you haven't even told me your name yet. We should talk further. And he goes, okay. He was kind of reluctant. He goes, okay, my name is Mark Randolph. Here's my phone number. And, he lived in Santa Cruz. I lived in Mill Valley. And so we agreed that we would meet halfway in Woodside a couple weeks later. Mark was Reed Hastings' VP of Corporate Marketing at his previous company called Pure. And Mark had this idea that since DVDs weighed less than an ounce, that you could mail them with a first-class postage stamp. And he knew that at the time I was also the chairperson of the trade association, which was Video Retailers Association. And I had all these kind of new businesses involved. I had a business that created in-store displays for video stores. I had this internet business. So Mark and I started meeting, in fact, once a week at Buck's Cafe in Woodside, which is, of course, famous for, that's where Jerry Yang came up with Yahoo, and other businesses have been created there. It's kind of like a center for great thinking. He later on brought Reed in, and we would have these regular breakfasts. And what they had this idea to rent movies via the mail, but they needed somebody who knew the video business, and I was that guy. Very and so that was, really got formally going in October of '98, and we just went from there.
That's very cool. Now, so in that process, I had a chance to meet Reed back then. I'm going to say this was probably 2004, maybe. I'm trying to think, 2005, something like that. But anyway, my question to you is, so I'm not sure how much you know about Angel Investors Network, but we have hundreds, thousands, tens of thousands actually in our database of entrepreneurs coming to us wanting to invest in their deal. So I'm always trying to lend a little wisdom and a little insight as to what it was like. So based on you getting involved with Netflix back then, do you remember what they did to get it financed and where they got the investors and how difficult or easy that was and what that was like?
Sure. It was an extraordinarily unique time. This was during the dot-com, bubble growth, and it was almost too easy. So Reed put in the first couple $1 million. He had just sold his company Pure to Rational Software, and I think they paid him $430 million or so. And Reed owned a big chunk of it. So Reed put in the first couple $1 million, but everybody, we got money from TCV and there was 2 or 3 other VCs, but in all, in the first couple years, we raised $103 million, and it was almost like too easy. There's almost no comparison to today, because at that time, people believed that anything on the internet was going to be successful.
Right.
It was only after, the bubble burst in April of '01 that, and in fact, we were going public. Deutsche Bank was taking us public in April of '01 when the bubble burst. And of course, we had to cancel that. And at that time, we were still burning about 300 to 500 grand a month and running out of money quickly. And so we had to go raise some more money just to get us to that next year, which in May of '02 is when we finally went public. So I think it's today it's so much different. I do, much of my own angel investing. I have about 17 different companies I've invested in, and
Right. No, that's interesting because I remember that, and I had a company that I had acquired called FirstNet Technologies, and we raised a couple $1 million real easy. And I was like, wow. And then we thought, well, let's go raise 20 or 50 million. I'm like, but I don't need it. And it was
Yeah.
kind of one of those conversations. You go, you don't need it, but you like, coming from an investor background, you go, no, you raise it when the market's hot. I'm like, but I
That's
didn't,
right.
and I didn't do it, and I wish I would have because,
Yeah. Yeah.
you
You
know,
never know, right? You never know what
exactly,
you're going to need it for.
exactly. So you were literally involved with Netflix from the very beginning before they built all this stuff, and you helped bring that video piece
Yeah.
to them, huh?
Yeah, I was the video guy. Eventually, Reed wanted. Originally, purchased all the content. I created all the studio deals. I did all the business development. So all those kind of annoying coupons and pop-ups on the internet that you had for customer acquisition, those coupons that were in every DVD player, all those deals I did. And then I eventually, Reed wanted me to move to Los Angeles because he wanted me to be close to content. I couldn't do it at the time, but I remembered there was a guy who used, because I owned video stores. I owned up at one point 10 video stores. And there was a guy named Ted Sarandos who was my video store rep who used to come once a month and sell me movies. And I ran into him at an event called the Video Hall of Fame. And I said, Ted, listen, we need somebody who lives in LA who knows content. You know more about content than anybody I know. Would you be interested in the job? And I remember, he was a little reluctant. I remember sitting in a car in our parking lot at Netflix for about 45 minutes on the phone with him, trying to convince him the internet was here to stay. And of course, now he's one of the most powerful people in Hollywood, and deservedly so, because there's no one that I know who knows more about content. But yeah, I was the video domain guy, so I knew, having worked in video stores for years, after that failed DVD vending and investment in video stores, I started opening my own stores and worked behind the counter. I loved kind of that one-to-one relationship with customers, talking about movies, and and our stores carried 30,000 titles, so we were as eclectic as you could get. Our silent section, I think, alone was about 10 linear feet, 4 shelves high.
That's awesome.
So in that process, I learned all about kind of both from the business model as well as kind of merchandising and marketing, how people think about film and entertainment and what makes them happy. And so that was kind of the role I played at Netflix, and then later, building the business model at Redbox, kind of looked at, well, what does the other half want? What is the Netflix consumer was one type of consumer, but there was a whole nother household in the US, which I tried to address with Redbox.
Well, that's very cool. So now you fast forward in Redbox. Vidbox is coming. The Redbox comes along. So you'd already thought about this vending machine idea prior, and you had some failures. Now you're going, maybe you have the knowledge or the money, or what was it that tripped you to say, "No, I can make this work now"?
It was kind of an interesting confluence of a number of things. We had at Netflix, we had gone public in May of '02, and a lot of us, including Mark Randolph, one of the other co-founders, he and I and others had seen during the dot-com bubble burst a lot of people, a lot of friends who had gotten wealthy on paper and then lost it all because they weren't able to kind of monetize their stock. And as executives, we were in, 8, but the ones that controlled our ability to sell stock. And so we both wanted to be able to sell our stock and be able to take care of our family and pay for education. So while that was going on, our stock was collapsing. At Netflix, we came public at 15. By November, it was down to 9. And, we were kind of seeing the same scenario again. Right at that same time, some folks from McDonald's, the business development group, reached out to me and said, listen, at McDonald's, we just had our first declining year-over-year sales, And there's a bunch of us who were charged with figuring out how to turn McDonald's around. One of the ideas we had was, what if we rent movies at McDonald's? You're forced to return the movie. You smell the burgers and fries. We might create an incremental transaction. And they wanted to know, would we at Netflix be interested in helping them? Because, of course, they didn't know anything about the business. Well, when I presented the idea to Reed and the rest of the executive committee, of course, we were all McDonald's avoiders. No one,
Yeah, right.
no one would ever admit, eating at McDonald's. And so we told them no. But about a month later, I thought, this might be a way to take what was a failure back in the 80s for me, the vending machine, and kind of prove that now the time is the right time. At the same time, I would be free to sell my stock in Netflix. And so it was just like the perfect timing. So in January of '03, I left Netflix. Reed immediately hired me as a consultant to help explore expanding internationally. So I went to Japan and I went to Germany and England on his behalf to explore expanding. And then on my way back from the UK, I stopped and talked to these guys at McDonald's, and it turned out we just hit it off. I loved the organization. I never thought I would, but I just fell in love with all the people there, and they hired me as a consultant on the spot, and then a couple months later, I became a full-time employee.
Very cool. Very cool. Well, that's so cool. And I just had another memory. I got involved and we did not raise the capital, but a guy came to me and we were going to raise him capital for a pizza vending machine that had some type of infrared heater and stuff. It's like, so that vending business is pretty amazing business when you think about all the stuff that it does.
Automated retail is fascinating. It works in some places, it doesn't in others, but where you have a product that's really a commodity, where there's not an issue of quality based on, where you're getting it, because a DVD is made by Paramount is the same at Walmart as it is in a vending machine, as it is at those days in your local Blockbuster. So in that case, automated retail, it has a lot of efficiencies with space and labor and all those things. So it was a really kind of a cool business.
And when you think about it, it's kind of like you're in the real estate business, right? Because you're capturing a footprint, and I'm assuming that the people on the other side of that, there's some type of calculation of what kind of business it brings back into the retail out location. What is the income per square foot and all that kind of stuff? Is that the case?
That's exactly right. In fact, McDonald's, when we had to go out, even though the corporate McDonald's was funding this initial effort back in '03, because the way McDonald's is structured with franchisees, the franchisees in each region control what new products go into their market. And it's a real democratic process. Each owner has one vote, regardless of how many stores they own, and corporate only gets one vote. So we had to go out and pitch these guys market by market on why a red box vending machine was not only good for the revenue you could generate as a percentage of our revenue, but it also would drive incremental sales. And so we did all these test scenarios and found that it drove between 2 and 3% incremental sales at the McDonald's. And an average McDonald's does $2.5 million. So you're talking 70, 80 grand a year per restaurant that we put the kiosk in. And ultimately, we only got in about just under 3,000 of the 13,000 US McDonald's, because by the time we got to about 2007 or 8, McDonald's had turned around, and some of the old timers would tell us that Ray Kroc would be rolling over in his grave if he knew we were renting R-rated movies, at our family restaurants. So we kind of called it quits there and kept, but those are still there. Those 2,800 red boxes that are at McDonald's are still there, but the majority, of course, are in grocery stores and Walmarts. There's like over 35,000 kiosks, doing about 2 million rentals a day still at Redbox.
No, I love the model, and so we at Angel Investors Network got introduced to Sandro and Jorge and the whole VidBox model,
Yeah.
and I become very bullish on the whole investing in Mexico type thing as a side note.
Uh-huh.
But we're sitting here and we're looking at it and we're going, wow, you got somebody like Mitch Lowe who's been there, done that, can share all this wisdom, all this insight on how to do it. You can plug in. I know you've plugged them into all the studios to get all the content.
Yep.
And can you explain from your perspective the situation that I think is just so attractive in that because of what happened with Blockbuster and those blue machines and that acquisition,
Uh-huh.
why VidBox is so positioned so well with that asset to really be a significant leader in Mexico and actually dominate and own Mexico?
Yeah. I think amazing components to this, why this is such a great opportunity. The first is that, and this was true, still is true in the US. The Hispanic household is a household that loves entertainment, but loves it in a way much different than others. For them, it's a family, it's a group event. So it's not someone sitting in front of their laptop or on their mobile phone or their iPad watching a TV show. They love to all hang out together and watch a movie, which means the best way to do that is with a DVD, and the least expensive way is with a DVD on your family television. And households in the US kind of break down into demographics, but the highest volume user is the Latin household. So second, you have an economy that is just booming. I mean, if America was growing at the rate that Mexico is, in fact, I was just in Guadalajara speaking at 3 universities about entrepreneurship, and I had about 5,000 students between the 3 presentations I made. And this city is just representative of a number of cities in Mexico, but there are 4 million people in Guadalajara. 4 million of 400,000 of them are in university, and it's just a booming economy and just ready to explode. They want entertainment, they want education. It's just to me, it's just a fantastic opportunity and a market. So and like you said, with what happened with Blockbuster's failure. The VidBox folks were able to take advantage of getting equipment at a fraction of what Redbox had to pay.
Are you hearing that little beep beep noise?
I am. It's an incoming message, and I just
gotcha. I was wondering if it was mine. I'm like, what is that?
Yeah, but anyway, you've got great demographics in Mexico. You've got a booming economy. You've also got a lack of real good options for consumers there. All the video stores close. I think you've probably heard Blockbuster in Mexico was their most profitable region, right. But most of the other video stores closed. So there's not a lot of good options. The cost of subscribing to pay television or subscription services in Mexico is not affordable to the majority of the households. It's just, it's got many, even in the US, Redbox still has many more years ahead of it, but in Mexico, it will last even longer.
Well, and that's one of the things I want to kind of jump to. One of the objections is well, no one's going to rent a DVD anymore. You just stream it from Netflix or you get it on the internet, right? And it's like, and I'm like, yeah, I would never, I don't rent them. I wouldn't do that. So, you kind of buy into that. But then every time I go to a grocery store, here in Escondido where we live, there's always one person there and sometimes 2 and 3 standing in line for the Redbox. So how do you answer that the life of these boxes and what the life is for these, not in the States, but, in Mexico?
It's very, very simple. You cannot get new releases at Netflix or these streaming services like you can at Redbox or VidBox. VidBox and Redbox have the latest new releases 6 months, sometimes a year before you could get them on any of the streaming services. So if you care about, the titles that represent 80% of all the rental revenue, why would you want to wait 6 months to a year? You want to rent them when they're still hot, when they just, recently come out of the movie theater. That's the simple, reason. It's you can't get what you want as soon as you can at Vidbox or Redbox. The other thing is DVDs have a lot of flexibility that play into value. If you're streaming it, you're watching it potentially on a small screen. You're not able to loan it to a friend or have your kids watch it in their bedroom. You've got each one of those is a separate stream. And so, and many households in especially in Mexico, don't like paying subscription fees, don't like paying, high pay-per-view costs. So it's you get content that you can't get anywhere else at that time. You get the best content, the hottest movies, and you get them in a very flexible format like the DVD.
Well, Matt, and they don't have the bandwidth out there, but that's what everyone's got to understand is that and I really didn't put the two and two together because I didn't forget. Now, so going back to this idea that you get them 6 months or maybe a year ahead of time, do you think that there's ever a possibility that the Hollywood's going to change that model? Because that's actually by design from a product standpoint. You got the movie release, the DVD release, and then the streaming release, I would assume.
Yeah, well, it could happen someday, but it's far in the future. The whole reason is because of DVD sales. DVD sales still represent a huge percentage of their revenue, of the studio's revenue. And when they make the DVDs, they've got to also make them available for rental as well as for sale. So, maybe in 5 to 6 years, you start to see digital sales pick up to equal DVD, but people are still not comfortable buying a digital copy of a movie. Like, okay, what if I lose that server? Who's to tell me that cloud service is always going to be available to me? People are much more comfortable with a tangible item that they know they own and they have the rights to. In fact, one of the dirty secrets here for what the studios are doing with digital sales is you never really own that. You are just having a license to use it while their business has the cloud service to deliver it to you. You never own that product like you do when you own a DVD.
Right.
So there's maybe 10 years. I don't know when it's going to be, but the people are not accepting buying digital copies of content yet.
One of the other questions I wanted to ask you regarding Vidbox is, you're the chairman of the board of Vidbox. You obviously bring the skill sets, the knowledge, just the acceleration of time and mistakes. You get rid of that because of your background. Can you share from your perspective why Sandro and what they have in place there is why they're such the perfect fit?
Yeah.
I know how I articulate, but I'd like to see how you articulate that, because they seem to have the perfect fit for this distribution of these boxes and setting this up in Mexico.
Yeah, well, there's a number of things. I think the first is that they really understand the market. They understand, what the consumers want there, and they've got, within their organization, a whole lot of people with a great understanding of consumers. Second, they have logistics, they have warehouses, they have trucks, they have all the people in the major cities that can perform most of the functions, the technical functions, the delivery functions. They have great relationships, and in fact, I have found them when I've gone with them to meet with grocers and so on. They just have a great way to interact in a respectful way, an understanding way. So they have logistics, they have people, they understand the market. They're pretty much in all the big cities where really the true business of this is. But I think one of the most important parts is they are always ready to try and learn and do new things. You know, Sandro and John have impressed me so much on how much knowledge they soak up so quickly. You know, for example, they went directly to the manufacturer of these kiosks, NCR, and got to them right at the time where the most senior people who developed these kiosks were looking for jobs, and they hired them all. So they brought on not only me, they brought on the people who pretty much designed this equipment, the people who wrote the software. They brought on a guy who installed and maintained, who ran the team that maintained it. So you combine that with their existing team, their logistics team, and their delivery people in Mexico, and they're the perfect fit.
No, that is so impressive that they do think out of the box and they put this team together.
Yeah.
And it is very, very exciting. Now let me ask you this. So you have been involved with Netflix, who raised capital, went through an exit. Mm-hmm. Redbox was formed. I'm sure there was some capital raised and there was an offering there. What do you foresee as far as a chairman and being part of VidBox, the exit strategy for investors with VidBox?
Well, you know, one of the most amazing assets that VidBox will develop, and which Redbox developed but hasn't monetized, is how much consumer and valuable consumer information you have. So, for example, VidBox will know through patterns what day, what time of day, what locations people go to. And at the same time, they'll have their email address because people want receipts. People want to get an online receipt. That information is incredibly valuable to those retailers and the products that are sold there. If you have a rough idea that between noon and 5 o'clock, an individual on Tuesday is likely to go to Soriano's, you can send them an offer for a product that they might be able to get a discount at there.
Right.
This kind of information will become extremely valuable, and not just valuable to the retailer and the products, but to the consumer, because now the consumer can get very relevant, valuable offers and coupons. So that's I think that ability to monetize that will be important. All the advertising components because, you know, when people come to rent a movie, they're in an entertaining mood. They pay much more attention to advertising and are much more willing to interact because it's a fun thing. You're doing something enjoyable. And at the same time, you know, this type of business throws off a lot of cash. So a lot of cash can be distributed with the kind of high margins you get on this business. A lot of cash can be distributed back to either new investments or back to the shareholders.
Yeah, no, it's like behavioral marketing at its finest to
Yeah.
be able to do that.
And
So,
then probably before I end, the biggest thing is for us at Redbox, we were throwing off, you know, $200-300 million a year in cash, but we had a extra burden that VidBox doesn't, is we were financing the equipment. So we were paying 8 and 9 times more per installation for equipment than VidBox has had to pay.
Wow.
So all that cash goes back to the shareholders.
Oh, that's awesome. So do you visualize that VidBox might go public or it's going to get bought out? What is your thought there?
I think it's, you know, all these companies that are delivering over-the-top services and will start to, you know, do more streaming and other types of entertainment services in Mexico, I think what they'll see is a combination with a VidBox, you know, an acquisition of a VidBox and a merger of those customers to get both services like in the old days when Netflix, you could get movies by mail, you could get the new releases by mail, but you'd get the kind of deeper catalog over the top. I think those are big potential acquirers
Yeah.
of BitBox. You have this loyal group of customers, you know a lot about them, and you could merge services and have both a streaming and a new, because the studios will never make their high value streaming content available cheaply or within a subscription package like they do make it available on DVD.
Right, right. Let me ask you two questions. I always like to get these questions. So as an investor who's invested in 17 different companies, you've been around the angel world, you understand startups to exits and all that kind of stuff. What's like a good piece of advice you would give to somebody who's a high net worth individual? They come into Angel Investors Network world. They're watching Shark Tank TV show or something like that. They're going, man, I want to do that. What's the best advice you would give that investor who's never done it before, but he wants to put some money into some deals?
Well, the first one is, I would say, don't do it on your own. I think, join a group like yours, or, find a group of people who have been doing it for a while, whether you go in as a limited partner in a fund or you join with a group of people. But, I made the mistake of just, going solo. And so for the first couple of years, and if I look back, I just, go, how in the world could I, do that?
What was I thinking?
Yeah. So I think, being part of a group, being part of an organization or learning from people, I think I think the best advice I didn't take until a couple years after I made lots of mistakes. I think the second is, and this might be a result of my first point, is develop a system, a set of check boxes that you use to, almost in the same way a credit company would score your credit worthiness. Think of like the 6, 7, 10 things that to you are the way you would evaluate an investment, and really stay rigid to evaluating every opportunity along the same scale. Of course, you want to look at the leader, and you might have 2 or 3 pieces of criteria. You might want to look at, the competition. You might want to look at, is this really is what the amount of money they're raising really sufficient to get to the next milestone? Because, in fact, I think the most common failure I see, or mistake I see, is they have not raised enough money to get to the next milestone to prove that they're worth getting more money.
Right.
And so really really trying to figure out, can they really do what they say they're going to do with the money that they're getting and in the time frame? I think that's something that you need to constantly look at.
No, and those are two good things. So we've kind of solved some of those, or 2 of those actually. So we actually teach our investors. We're not only do we have a group of investors and invest and do deals together, but we also are education based. So we have a funding evaluation where we rate between 30 to 38 different areas of a business, and we teach the investors how to score and how to rate each area. And actually, a lot of investors come back to us and go, "Hey, I'll pay you, Greg. Go do your funding evaluation on this company I'm thinking of investing in." And we save people a lot of times, because you find the red flags, and like you said, you can score them and compare them to this deal, and then it comes back to deal flow. Going, if you have more deal flow as a group, you have better deals. And the other thing that we're doing, for your information, is we're doing with the new laws. I wrote a book called "Saving America One Crowd at a Time."
Right.
And it's about the new crowdfunding and Jobs Act laws, and we leverage the 506c direct mail laws, where we buy lists of high net worth investors. We have the issuers do 100,000 piece mailing, so it's a little bit of an investment, but a couple $100,000 investment in a direct mail piece can yield as much as $2.5 to maybe $7 million of investment capital. So, I'm telling angel investors, look, make sure whatever that first round is, you allocate enough to raise money for that next round.
Right.
And now we're using the direct mail and the new laws to advertise as a means to do that. So it's working really well.
That's smart. That's smart. Well, I wish I had met you a few years ago.
Well, it's not too late for you along the same lines. So now you're an entrepreneur, and I've got this invention, I got this new app, I got this new idea, and I think I need a couple $1,000,000. What's the best advice you would give them to think about and before they run out there and start taking investor dollars and that kind of stuff? What's your best advice for the entrepreneur?
Wow. I'm trying to think of one or two things, but I think the most important is to really detail out what you can accomplish or what you believe you can accomplish in set periods of time, and make sure that that's sufficient to prove that you're worthy of the next step. So many people, especially entrepreneurs, are passionate about their idea and they want to get it off the ground, but they don't think in chunks of time as far as what needs to be done by what point in time. And so I think it's really modeling out the next 2 years of where do you want to be at the end of every quarter over the next 2 years. If you're developing a product, what state should it be in? If it's a product that you're getting customers for, how many sales do you need to have you made at each point in time? But so I think it's going beyond the vision of how cool it is that whatever it is you're creating, and doing the kind of the grunt work of mapping out where you want to be and when. It's kind of that whole milestone system. But there's so many other things. It's surrounding yourself with smart people, finding people who can really give you honest advice and critical advice. The kind of people who won't just, say, oh, you're fantastic, you're great, but actually tell you what's wrong. I always found that the only people I could get to always tell me what I was doing wrong were the people who were brand new employees, had never worked before, who didn't know about political correctness.
You're right.
Tell me, that I'm kind of full of shit, when I was, and didn't care about, didn't understand the repercussions. So I always like to surround myself with people who it's their smart people, but it's their first job, because those are the ones I can always rely on to tell me what I'm doing wrong or what we're doing wrong.
No, I love that advice, and I use the language. I always talk to entrepreneurs and I say, as a mentor and as a coach, will you give me permission right now to tell you what you need to hear, not what you want to hear? Right. And of course, in the first conversation, they always say that. Then as you start to tell them what they need to hear, they start backpedaling, arguing with you. And I said, wait a sec. The other thing I want to tell you is that we don't argue. Okay, right. You say yes, you soak it in, and you just go on. But we don't argue, because you're not going to change my opinion of what I think you need to do.
That's right. That's right. That's exactly right.
That's awesome. Well, I appreciate your time. I think we should wrap it up. We're almost going on an hour here. It sure is exciting, and I'm going to be glad to say that I was part of involved with VidBox Mexico and what's going on. And I know it's going to lead to more investment opportunities and more opportunities of what we're doing in Mexico with your team there and what's going on. It's just fantastic. We'll make sure to get you a copy of our newsletter out there with this article that we're going to put into it. And if there's anything we can ever do to help you, our whole focus, Mitch, is to help entrepreneurs succeed. And unlike local angel groups, we're a nationwide group, and we do a lot of webinars. We do a lot of stuff online. And I'm trying to leverage technology and the new laws as a means to communicate and get deal flow, as well as we're putting together a directory of C-level executives who are willing to help entrepreneurs in exchange for equity or maybe reduce fees, because most entrepreneurs don't really need money. They need a team, they need coaching, they need capital, they need that kind of stuff.
Yeah. Well, I'm looking forward to connecting. If you send me, you have my email address. I'd love to follow up.
Yeah, no, I'll get that to you. Let me go ahead and we'll end this recording, and then we'll do that real quick. So this is Greg Gretter saying thank you for watching today. We appreciate it. Be sure to check out angelnetwork.com. Thank you, Mitch. We appreciate you, and do what I do. Wake up every day with an attitude of gratitude and tell somebody you love them.